All right, ladies and gentlemen, I hope you had a wonderful day. We got another down day and another oversized t-shirt to talk about, but I'm going to do things a little different, and we are not going to recap the minutes as in depth. So we had the Fed minutes. If you didn't see the reaction, we had a lot of up and down. If you looked at the numbers, it was only 1% on the NASDAQ and under 1% on the SPY and Dow. So kind of impressive. We broke through some levels. It didn't absolutely flush, but it's continuing this whole downtrend of August, and it hasn't been pretty. Seasonality isn't good. Some people are already saying September is coming early because September is a worse month than August usually, but that's beside the point. We had the minutes. We had somewhat of a reaction. We're 40 points down from where we started the week, and the minutes gave us something today, but I want you to understand the context, and it's going to be very similar. So what I'm going to do is talk about the minutes, the broad factors that you have to understand. I think some people got caught off guard today, and then I think I'm going to share with you some crazy theories because, like, the market's going crazy right now to a degree. You don't feel it, but it's happening. There's a lot of things boiling, and really, this isn't even the freak out point. Remember we were saying don't freak out point? Yeah, well, this is where the freak out starts to happen. Then we see where we go from there, but I got a couple of theories, and I think you might want to hear them. So, Chad, what I need from you is a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. It's free 99, and we will see you there. And give me some good questions tomorrow too. I don't know if you got good questions, but we'll see. And even next week. So we're going to talk Jackson Hole theories. We're going to start looking ahead. We already have been. We're going to talk a little bit about Japan and all the bonds getting blown out. I got plays for you too. I still got plays, but like, I don't know. I want to punt more. I need to punt more. What's his name? The guy for the Raiders, Janikowski. Was that the best punter? You know what I'm saying? But anyways, let's talk about the minutes. God bless you all, Chad. Thank you for being here. But it's very simple. I want you to understand how we got here. We had a little bit of confusion today, but if you remember the last watch list relating the FOMC, we called it the hawkish pause. Some people thought this was pretty humorous at the time, but just understand how we got here. It was the June meeting where they did the quote-unquote skip. The Fed actually did not raise rates and said, well, we'll see where we go from here. Then the data came in a little hot. Then by July, they raised rates after quote-unquote skipping one of the meetings. I guess, or maybe it was May they skipped and then leading into June, but hopefully you're still following along. But the recent meeting in July, they announced a rate hike, but that last rate hike was pretty much interpreted as the final rate hike of the cycle, and that was the pause. But remember, leading into that, everybody was saying it's going to be a hawkish rate hike. They're going to raise the rates, but the statement is going to read very hawkish. Even the press conference, it was supposed to be very hawkish. That is what everybody was expecting. So this is what happened today on the minutes. The minutes came out, and everybody's like, this is the most hawkish minutes that has ever came out, the most hawkish on the year. But remember, this is from last month. The minutes today was from a month ago, and it was from that meeting. So in a weird way, what I think happened today, and the fact that we got a reaction, because like I said, I expected some up and down. Maybe we do gap up by tomorrow, but it's looking like 4,400 is going to need a test. But it's like maybe we end up around here, but I thought we were going to have some action, and then it chills. But you had the action, and then you sold off. So wherever it ends up tomorrow, if it is off the minutes, the way I'm looking at it, I think people were way more prepared when the Fed actually raised rates, and now these minutes, I think it just caught people off guard. Like, wait a minute, why was it so hawkish? Well, I mean, a couple months ago, we were down with this. Everybody was like, yeah, let's go, pal. Fine with me, run it. So very interesting to see that reaction, but that's all I want you to see out of it. There were a couple of statements. They did say there could be upside risks to inflation. There were other comments regarding housing, and they think that the response to rates has peaked. Pretty much housing is not showing any signs of going down. They even said Supercore is not going down either. There was comments like that, but again, I don't think it matters too much in the sense that until we get a real tone shift or the data points the market in a direction. It's not like these comments should change too much, or as of the last 8 months, you haven't seen the same or large reaction out of any of that. So I thought it was very interesting today. I think the next couple of days, we'll see if it turns into either another negative week or a week that ends up with nothing, even though we got some action. Again, that schedule definitely did not disappoint, but now let's talk some of the theories. So I might as well stick to Powell and rates and all that, because after today's minutes, I have a theory, and it's just like, okay, it was the most hawkish minutes. It was a reminder of how hawkish that rate hike was, even though people at the time, again, ignored it. So it's like today really should not have been that surprising to anybody at any level, because remember, this was the hawkish pause or the hawkish hike, whatever you wanted to call it, but people called it the hawkish pause instead of the hawkish skip. But the point is, we already knew about this, but now I'm thinking there is a chance that next week in Jackson Hole, Powell comes out and then he says, wait, I'm extremely hawkish, and flips the script. That is what happened last year. So what would I give the chance of that? 30%. Yes, so I'm saying there is a 30% chance. And where do these numbers come from? Out of nowhere. I'm just saying, if I don't know, if I really was a mathematician like that and I had it like that, I think it would come down to 30. I'm eyeballing it off top, but this is what happened last August. This was the big Jackson Hole event that had everybody freaking out. You had the most hated rally in July. That was a big move. It was like 360 all the way to 430 in like a month. Not like 8 months, like in a month. That was a huge rally. We dropped a little bit, and then you started flushing after Powell came in, and he came in with a short speech and just reassured everybody that he is as hawkish as ever. So do I think that happens again? Next week is the Jackson Hole event. So after today and seeing what they're talking about and how it sounded, I'm giving it like a 30% chance. It seems like real estate and them. I had the first impression, I was wrong initially, that they were talking about people reacting to peak policy, but they were just saying that pretty much real estate is not responding, and that could be some of those effects with everybody having already low mortgages or even a lot of houses paid off. But overall, I don't think there is a high chance that Powell comes in and says anything more hawkish than that, unless he really wants to. But then again, I could tie it into a couple of theories. So there's that. But the other thing I want to bring up regarding Jackson Hole, even today, is just something to keep in mind. People are saying how bearish August is. You're watching this sell-off so far, but remember that most hated rally, you were running from the beginning of August all the way up till like today. You were like peaking out in the middle of August, and then it led into Jackson Hole. So at that time, Jackson Hole really knocked things down. There was a little bit more volatility leading into it, but it's like, if you want to take a look comparatively, we are selling off now coming into this whole event. So now, depending on how things play out, the bond rates, and that's what I'm going to talk about next, maybe Powell has an incentive to keep being bullish, or at the very least, it's just he got the whole world in his head. It's up to Powell. So there's no way to predict that, but we will be watching. But that's the first thing I want to talk about. Now, the second thing, here's the next theory I want to share with you today. It's everything going on. Have you seen the bonds? Have you seen all of the yields? What's going on? If you didn't know, we hit another high on the 10-year. This is the Japanese bond, and this is what I really want to talk about. But, just so you could see it for image sake, you're breaking out now. This is a new high on the 10-year bonds all across the curve. Even the 2-year went up to 5% today. But last time you were here, this was like at the lower end of like 2007. People said 2008, but you're higher than that. But this was like 2007 all the way to like even 2004. So welcome back, blast from the past, but very big day and just all over the world. Again, China, you got more bad news. They cut their rates yesterday. Seems counterintuitive to this, but their currencies weaken. The Japanese yen is getting blown out. And like we talked about this today, if you haven't noticed, It's like everything is like low-key all across the world since the beginning of August. There has borderline been like a drain. That's what's been happening with all these interest rates, currencies. Some people are seeing whatever the plays are making in the market. Just again, imagine if you owned some of these currencies. So like think about Argentina, and that's obviously on a smaller scale, but like even the Japanese yen, it's one thing to speculate on it, but like think about the banks and the companies there and the people who have a lot of yen. I mean, they're losing 4, 5, 10% on a bigger currency. That starts to add up. But what I'm trying to tell you here is like there's been a lot of pain with certain things, and I kind of have a theory, and of course it boils down to Japan. This time I'm going down to the bonds, and really what I think this is maybe this is that drain people have talked about with the whole, okay, Japan starts raising rates. People in Japan might want to start trying to monetize that. There's an incentive to bring some money back to Japan. I mean, China's collapsing borderline. You have all these different things happening, and even then, even in our market, maybe some of this drain could be a part of it, but all I'm saying is that if this starts to break out a little bit more, I mean, I haven't seen any good moments when this has gone up. So what I'm trying to say is that Japanese yields have risen so far for 2 weeks. It's getting back to the upper bound, and this has been the calmest the market has really reacted. Again, in December, any other time we saw some of these movements, the market would react very, very violently, and then it would, as the bond market would kind of correct itself, it would chill out, but then we would also run into an event. So what I'm saying here is maybe this could be the cause, but something is happening, like I've been saying these last couple days, as we start climbing, because now we'll see what happens with the 10-year. It's the real question, and is something big? Is Japan going to be a problem? Do you need to freak out about what I said? No. What you should freak out of is if the 10-year like hits 5% and goes crazy. Now we're hitting the 4.25. I just showed you that chart. It goes back to like 2004, but if you start going like above that and then it starts running after having this much like leg room and runway, that's where things start to develop. It's kind of like here, if we bounce, chill out a little bit, you might turn it into one of these, but it's like if this starts to accelerate after this and then you start to see big declines, then the story starts to change a little bit. So I thought that was interesting. Keep your eyes out. I'm not really committing to anything or any ideas, but it is fascinating what we have happening. The market is still kind of waiting, and even for tomorrow, I think it only boils down to Walmart earnings. Then Thursday, you get Japan CPI, and that could fuel into what we're talking about here. Then we get some more data on Friday, I think Conference Board, and then Philly Fed tomorrow, and then that'll be it. And then, like I'm saying, Jackson Hole next week. If we are going to see anything I'm talking about or any of this is going to develop, there might be that opportunity next week. So I hope you're in the game. But now, let us get into the plays. So, honestly, I was going to wrap it up. I should have wrapped it up there, because I didn't have too many plays. Like I said, I want to keep punting. I made a play on MT today. I bought 200 shares at 26.64, so not too bad, but I'm down like 148 on it, and the news was related to United Steel. They put in a bid. Again, Cleveland, CLF, they put in a bid. They were up till X rejected it. I don't think X has rejected it, so them being as big as they are, I thought it could have been good news. We even got it early. Thought it could be a good flip on something that didn't move, but then they got clapped with everything else, and then I made a trade on Ball. We flipped this not too long ago, if you remember, but I grabbed 100 shares at 56.04, ended up losing $1.53 a share. Down 150, but they had news of selling off their aerospace unit for like $4 billion. Their current market cap is like $17 billion. It's a good deal for them. It'll get them some cash as well too, but we heard this. We played that in the past. I thought that news would bring it up. It was lower than, I believe, or what today it was lower than when we traded it then, so I thought it would be a good flip, but then that got clapped. Then I hit an MES. I like bottom ticked it, didn't sell it, then it sold off, then I'm still in it, and then we'll finagle and maneuver through that tomorrow, but try to keep it small just in case. But that's it. Holding the yen. I'm waiting. I'm ready to average on a lot of stuff, man. I know a lot of people keep asking me. I even talked about it yesterday, so keeping my eyes open, but none of this smoke has really cleared. All I've seen is flames. We're coming into an event, but either way, I think we're going to find our opportunity, and we might get some fireworks to the end of the year. So I hope you're ready, but that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember to make a decision. Oh yes, I could give you a Glengarry Ross speech. I could say a lot, but do you realize how important like making decisions is to your life, and how making decisions has shaped your life, and how sometimes decisions and not making decisions can torment you, or they could bring you peace, my brother. That's all I want to leave you with. I could talk about it a little bit more tomorrow. We'll see, Chad. But either way, I hope you know you're ready. It's time to get in the game. I don't think the end of summer is going to disappoint. You're ready in your long term. Oh, yeah, you wrote it up. You got to write it down for just ride. That's why it's called a chair. Sit in it. Just sit in it. Put your feet in the sand. That's why you enjoy the sun. It gets cloudy. Okay, man. It's okay. I don't think it's going to rain too much, but hopefully you got a jacket. Like, you be like, shouldn't I leave the chair if it's raining? No. It's the stock market la-la land. You don't get out of the chair. I know. It's counterintuitive, but you get like a little, you don't even need a put, bro. So you don't even need a hood, bro. Just enjoy it. Have faith, bro. It's kind of like you become what you think about, but all I'm saying, Chad, enjoy all the moments. Appreciate the highs. Appreciate the lows. And that's it. That's word to uncle, man. But I love you. God bless you, Chad. I'll see you in the morning. That's it. That's it. I'm just like screaming at you. I'm not even awkward, bro. That's it. That's it. Except for the big shirts. I told you. I'm at that point in my closet now. I don't know what happened. Like, I went through the disciple. You call me Yoda. And then I had the other shirt. I didn't say anything about it yesterday. That was a big ass shirt, bro. I'm just saying. But now this, you see this? This one's huge, dude. If I stood up right now, I don't want to reveal how short I am. Like, look at this, bro. It's a lot of clothing, bro. Oh, you know what I noticed too? Okay, all right, last thing. It's not weird. It's just like a weird thought. It's not a shower thought. It's a real thought. Okay, so what happened? I was at the store the other day, and then I was with my niece and nephew. They were like looking at like baby clothes and like little clothes, right? And I saw the price of it. It was like $30, but it was like this big, like literally. You know what I'm saying? But like this shirt would be like the same. It's like the same price as an adult shirt. It's not that much material. All right, horn.